What's going on in the downtown real estate or condo market? Our next speaker is Mr. Ben Myers. Now, Ben is part of Urbanation. He is the Executive Vice-President of Urbanation. It is a research company. He manages his team. In addition to managing his team, he is also doing a lot of the research and the analysis of what's going on in the downtown high-rise condo market in Toronto. He makes and issues a quarterly report, a research report that he makes available after he compiles all of that information. He's here tonight to share with us his insights into what is going on in the market. He has a degree in economics, and since he received that degree, he immersed himself in research in real estate, and he created Urbanation and putting the information together to share with others. So please give it up for Mr. Ben Myers.
What's going on in the Toronto CMA condominium market? CMA is a census metropolitan area, so similar to the GTA, but just a little tidy area that we track. So in Q1, we introduced a new report called Urban Rental. We've been tracking the new and resale condominium market since 1981. So I'm not actually the founder of the company because I was just a little young lad in 1981. So this new report was needed because no one's really looking at rents in the condominium apartment market on a per square foot basis. As everyone probably knows out there, the size of units have continuously shrunk in the market as affordability becomes an issue. So actually, just by a show of hands, who currently owns a condominium apartment to rent it out? Just curious to see who I'm dealing with. Okay, so we have a few out there. So anyways, this report is aimed at individual investors, but for the most part, it's being purchased by the large companies out there. But here we'll talk quickly about the results in the market here. The average rent per square foot in the Toronto CMA was $2.11 per square foot. So it's up 2.5% year over year. So probably not what most investors would be to like to see, but up $2, up 2.2%. So actually, I ran some preliminary numbers for Q2, and it's actually up 4.3% over Q2 of 2010. So a little bit rosier numbers there. As you can see, in the former city of Toronto, was only up 1% year over year. So pretty interesting results, especially given the level of inflation that's happening in the new condominium market. And let's take a quick look at that. So the green bars here is the new condominium market. So the new condominium market has been going up at about 8.5%. So really over the past 5 years, we've seen 7 to 9%, and in some cases double-digit inflation in the new condominium market. So when you see the 2.2% increase in the rents, I mean that's something that sticks out in your mind. Resale market up 3.5% year over year. As you can see, some of the other top municipalities, Vaughan, Richmond Hill, Etobicoke, not very strong current rental markets in the condominium market, but obviously these markets are very emerging markets in terms of new condominium product. Markham, Scarborough, North York, slightly above average results in the rental condominium market. So this is what I thought was a pretty interesting chart. So this shows the rent per square foot for each of the projects based on when they were registered. So if you look at projects that were registered in 2007, 2.26, 2009, 2.26. 2010, 2.26, and then even 2011, 2.16, so lower than it's been over those previous years. Why is that an issue? Well, you paid 30% more for those units that registered in 2007 than you did here. So you're running into a little bit of a problem. So I came up with a little bit of an example. So if you have a unit, the average unit that rented in this period was 750 square feet. So if you have a unit at 750 square feet at $2.26, you're looking at rent is about $1,700 a month. So the average unsold unit, the average asking price of a new condominium in the Toronto CMA at the end of the first quarter was $550 a square foot. So take that 550 square foot unit and 750 square foot unit and 550 per square foot, you're looking at about $415,000. You put a 25% down payment, you got a mortgage in the neighborhood of $300,000. So with a 3% interest rate, 25-year AM, you're looking at, with your condo fee and property taxes, you're looking at rents, you're looking at about $2,200 to cover. So it's quite a spread. It's about a $500 spread there. And that's just at a 3% interest rate. You know, if interest rates went up to 6%, you're looking at $2,600 to cover. So it's pretty interesting results because the market just continues to get more and more and more and more investors. So that's why you need to be a little bit more savvy. Instead of just looking at a project, hey, it's downtown, everyone's buying it, let's get in. You really need to delve into the numbers to really see what's happening. And here I just went into a little bit more of an example of what I was showing in that previous chart, just on a project-by-project basis. So some of you are aware of some of these projects, Mississauga City Centre, Toronto Harbourfront, and the downtown core. So here, this project by Amicon opened in 2003, $256 a square foot. Now, you know, unbelievable that pricing now that you consider the Mississauga City Centre is up near $450 a square foot. Registered in 2007. Look at the rents it's getting, $2. Chicago by Daniels opened in 2007 at $397. Rents are almost essentially the same. So you would think with a brand new product that they would be getting higher rents. Same thing happened here. Atlantis and Aquarius by H&R Lifetime Developments. $231, actually higher than West Harbour City, which registered 3 years later. And I didn't just specifically pick these examples to make my point. This was kind of across the board in terms of the projects. These ones I just thought were the most easily comparable projects. So here we're looking at the College Park by Canderel, $280 a square foot. If anyone's familiar with the downtown Toronto market, that's unbelievable. You know, that's at $600 or $650 a square foot now. So you're getting the capital appreciation in your unit, but $2.67 to $2.60 here. So again, like I said earlier, 3%, 30% increase in the price of the unit that you paid, but really no increase in the rent. So that's certainly something you need to take into consideration when you're buying a downtown Toronto unit. And we'll go on and look at some other projects in other areas that may be a better investment than downtown. Here I just looked at the end rents. Obviously, like I mentioned, the size of the units are shrinking, so it's not as important to look at the end rents. But here, obviously, it shows that it's not appreciating as fast as the rent per square foot. It's only up 0.9%. So we're at the average rent in the Toronto CMA is $1,686 in Q1 of 2010. So what does that mean? If you're looking to get $2,200, like I mentioned in my example, well, if it went up 0.9% a year, you would get up to $2,200 a month in 46 years. So I'm not sure if you guys are that long-term investors, but we'll definitely have to monitor that. City of Toronto up 1.5% year over year. Actually, North York was down, and Mississauga up, and we'll discuss how Mississauga is actually performing very well in terms of the Toronto CMA condo market. So. Here, I know this is a lot of information here, and you might need to look at your handouts to get a better idea of what's happening here. So I looked at some of the major municipalities in the Toronto area. So we looked at Mississauga, Markham, Toronto, North York, Scarborough, and Etobicoke. I looked at appreciation in the new condo market, appreciation in the resale condo market, appreciation in the rental condo market, and then just the value. So the rental index price divided by the new unsold index price. So it basically shows that the best place to invest right now is Mississauga. So it's number one in new condo appreciation, number one in resale, number one in rental, and only second ranking in the value. And amazingly enough, the best value in terms of rents are in Scarborough. You know, a lot of people try to avoid Scarborough like the plague, but just because you'll see, you know, you're not getting good new or resale appreciation, but in terms of the rents that you're getting for those units that you hardly paid any money for, it's not bad. So don't always overlook Scarborough. It may be a place that you can make money if you're looking to hold and rent a unit for the long term. So interesting that the 905 seems to be the best place to invest right now. Mississauga and Markham. If anyone's gone up to Markham, you can see there's just along Highway 7 is a condo explosion, and there's a lot of available renters there. Obviously, we know the ethnic mix of Markham right now, and that ethnic mix wants to stay there, and they want to rent there, and they want to live there, and they want to work there. So it's making for a great place to invest right now. Here I just took a quick look at some of the projects that had the most rental activity in Q1. So I'm not sure if everyone is familiar with a lot of these projects, but the Condominium was the number one, 73 leases out of, I believe it's around 400 units in the